PhD in option flow. I mean, this is amazing. This is a whole science in itself. This is absolutely fascinating, and your depth of knowledge is very impressive. You know, you called out the other day the QQQ. I think it was, let me have it written down here. The calls at 307, expiring 323, was a $5 million order of flow. And then you verified, I think you had news for us today. What did you see with the open interest?
I did. And so let's kind of just talk about a little bit on why this really was so unusual.
Yes, please tell us.
First off, let's talk about where you'd expect to see positioning, right? So we know that SPY and Qs are going to be primarily used to, hedge. You're going to have rolls. You've got people that have larger books that are going to constantly be taking off. If they had some puts, they're going to make sure that they always carry that. And that's always going to be something that adds, to some protection. Most oftentimes, you're going to see that larger positioning in your third Friday, which is your monthly OPEX. So it is a little bit different when you start to see, multi-million and some size come in to something that's not your normal expiration. So that's kind of always something that's like, ooh, why that day? Even more interesting is that we have FOMC this week, and on Monday they came in for contracts that trade this week on Thursday with $5.31 million. That is a lot with not a lot of time. They came in positioning. I think they were right at the money or a little out of the money into the 307s. And then here we have a gap up this morning. So far, of course, I have to double check. So far, they are still in that. I checked that this morning. Now, when I did check open interest this morning, of course, I wrote down the volume yesterday was about 23,000 total. This player's contract count was about 17,000. So it does look like there was some profit taking, but OI did increase this morning. We now have 14.1 thousand still on the book. So that's fine. They had a hell of a move yesterday. I mean, I would have been surprised to have it all come off because you really already had a really good 40% pricing on that. So it's interesting because with FOMC coming up this week, that's really kind of putting yourself out there, and it really just seems to be around this event. And I don't want anybody to think that that's what I think exactly is going to happen, because they can close at any time. And so if you're not monitoring that, I don't want people just to carry and carry additional risk on just because of that. But that's why you want to have that. You want to be able to go, because that could have easily just been traded yesterday to where we did see that line come in, but they had that profit. And remember, indice ETFs trade 15 minutes after the close. They could have closed that yesterday, 10 minutes after the close, and most people wouldn't even know that they could do that or even looking for that. So I just want to kind of add a little caution there that, it is worth making sure you are checking that open interest, especially on very liquid names that have so many expirations like the SPY and the Qs.
Absolutely. Wow. Thank you so much for sharing that.